And it's been a very busy couple of days in the cryptocurrency space, especially when it comes to the SEC, with the SEC chairman coming out and appointing a crypto czar yesterday, which again, usually you only appoint a czar of something that is a fairly mature market. So that's actually a good sign for cryptocurrency. But on the other hand, the SEC chairman came out today and said that there will be no change in the securities framework for any ICOs. So what that means is they will not be creating a specific ICO type regulatory environment. So this is both good and bad. Tell me, what are some of the ways that this is going to affect large companies or banks or large financial firms getting into the industry, and how's this going to affect ICOs?
So it's going to affect ICOs in the fact that if you want to do a private placement of an ICO, you're still going to use Reg A+, which everybody's been using. And if you want to do a public ICO, it's essentially going to be an IPO that's then traded on an SEC regulated exchange, such as an ATS. So for the near term for ICOs and altcoins, there's still a little bit more infrastructure that needs to be introduced, more interpretation of exactly what that's going to look like. So that's probably a positive catalyst further off, maybe Q1, Q2, 2018, maybe Q4 this year. But for cryptocurrencies themselves, such as Bitcoin, Bitcoin Cash, Litecoin, it's actually a very near-term positive catalyst because it sounds like those things are going to fall under the CFTC umbrella, which has been very pro-Bitcoin and been trying to onboard and embrace these things quickly.
Yeah, actually, and Ethereum is kind of the weird one there. I think that Ethereum is, it's unknown. Mm-hmm. What's this going to be? Because if you looked at Ethereum back when it first came out, it could have been, looked at as a security, but now all of its activity is 100% as a utility. It's really less of a speculative asset than even the cryptocurrencies. So we'll see how that ends up being regulated. That is the one I'm really curious about. Something else we saw today was if you've been perusing Fidelity's job listings, you've noticed that they have quite a few listings that seem to point towards them opening their own cryptocurrency exchange. Mm-hmm. So there's more proof of large companies getting in. We also have a couple of new ETF applications for Bitcoin ETFs that were submitted today after being pulled off the table a couple months ago. Mm-hmm. How do you think these things, Fidelity with crypto exchanges or these ETFs, how do you think these are going to affect the market? And do you think it's going to be immediate, or what do you see about these?
So I see Q3, Q4, that being very positively accretive to price over the overall broad spectrum of things. And the reason for that is there's been a lot of banks and retail brokerages and such that have been waiting on the sidelines for regulatory guidance and compliance. And the SEC is making those steps. The CFTC has been making those steps, but everybody was sort of waiting for the interpretation of the SEC, whether they were going to reject or accept blockchain and cryptocurrency in general, which is very obviously that they're accepting, embracing, and by using the current framework they have, it's going to accelerate that timeline of institutional adoption. So all these strategic initiatives that have already been architected can now be implemented. And you're seeing that with Goldman buying exchanges, you're seeing that with Fidelity. Everybody's going to do this around the same time. And if you look at liquidity measurements right now, on exchange, it's about a 1/3 average daily volume of what it was early Q1. So if you want to buy maybe 500 or 1,000 Bitcoin, quickly you're going to move the market 1-2%, whereas it was 25 basis points to 50 basis points before. But it's interesting when you juxtapose that with the demand we're seeing in the off-exchange environment right now. Did you want to talk a little bit about that, Lou?
Yeah, so on the over-the-counter side, we're seeing higher volume, especially over the last few days, than we have seen in a very long time. And I think, again, it goes back to as regulatory environments become clearer, as the things like futures and so on become available, more and more institutions want to get into this, and I actually think they're trying to get in right now without causing the kind of choppiness that we see in the on exchange.
And that might delay, I don't want to say tidal wave, that's probably too strong of a word, but it seems like everybody's doing near the same thing at the same time. And combining that with a low liquidity environment, you could see some very large upward catalysts very, very quickly if all these initiatives roll in. So we could see the market cap doubling, tripling in the near term, as I see it. So
it's kind of like waiting for that first domino to fall, if you will. All right, well, there was the market for the last few days. Thank you very much for tuning in.